Hi, good morning, guys. I hope you had a fantastic week as our every week weekend routine. Let's start with the weekly outlook for the next week already. So we have in our screen, we have the euro dollar time frame on the weekly time frame. Let's see what euro dollar is doing. So as we see that euro had swept the external range liquidity. Now, those who follow me know what is my logical next target is the internal range liquidity, which is this fair value gap. So I expect price to go towards this WFVG and then we can look for sells. This is what the weekly time frame is telling us. Now let's go and check the euro dollar on the daily time frame. So the daily time frame, this is where things get confusing and I want you guys to pay close attention to how my thought process works in these scenarios. So this zone that you see is the weekly fair value gap. However, if you look at the swing structure, daily fair value gap is right here. Now there could be two scenarios. Since price is already nearing the premium zone of the pullback, price has all the valid reasons to just revert from here and leave this daily fair value gap for future purposes. Until then, what we would focus on is this area, which is the weekly fair value gap. If price has to mitigate the DFVG, then just play out in your mind what could be the likely scenario. There are so many news on the next week. There's a euro dollar PMI, there's a US PMI. So there could be a huge pull up, price mitigates the DFVG, and in the same day we could see a pumped down candle on the daily time frame. So this is a likely scenario. So when it happens, don't get surprised because this is what the price is already telling us ahead of what's coming. So this is what the daily time frame is telling us. Now let's go and check out the H4 time frame. So on H4 time frame, we see that price has smartly engineered sell side liquidity on the downside already. Now again, those who follow me, they know why price would have done this. And also, quite interestingly, right below this weekly fair value gap, price has left behind this equal high buy side liquidity. So it goes without saying that the most logical trade idea would be we wait for the sweep of these equal highs, mitigate this WFVG or the DFVG, and then we look for shorts towards this H4 ERL leg. So this is the outlook on euro dollar. Now let's go and check out gold. On gold, it's a bit complicated, but hear me out. The swing structure technically is bullish. Now price has been on a downward trend since last several months. There is this major sell side liquidity below this huge fair value gap, which I expect price to just tap into and then give us a bull run for the foreseeable future. So that's the outlook on the weekly time frame. Now on the daily time frame, if you see, we are on a bearish order flow. Price has completed its job of mitigating the premium and also taking out the internal range liquidity. It is currently mitigating the daily order block. Now if price has to return, price will immediately return from here without wasting time in the coming week. That would confirm our weekly outlook that we are building today. Also, there's a nice sell side liquidity, a little one engineered to facilitate its way towards this weekly fair value gap. So that's what the daily time frame is telling us. Now, if you go to the H4 time frame, this is where there's more of a waiting game. So if you see, price of course is on a immediate order flow is bullish. Now why was it bullish? Because it was doing a pullback on the daily time frame. Now for us to have short opportunity, what we would want to see first, we would want to see this H4 FVG get invalidated or inverted first. So hence I've written here shorts become valid if this H4 FVG gets inverted. Once this happens in the next week, then we can safely start looking for shorts up to this H4 sell side liquidity, which is the ERL for H4, and it is also the weekly fair value gap right below it. So this is the outlook on gold. Here we need to wait for this H4 FVG inversion. Until this happens, I'm not interested in trading gold unless we see something spectacularly different on the daily time frame. Now let's go and check out NAS. On NAS, I'm not so interested for the coming week. The reason is our swing structure is bullish. Of course, I expect a pullback towards this huge weekly fair value gap. There's a major sell side liquidity as well. But if you see, for the last 6 weeks, price has been chopping around this buy side liquidity and sell side liquidity. Hence, it's pointless to take trades expecting price would take one side first, because if you read this price, it's almost like a barcode. There's no real commitment. If you look at the daily time frame, there is a sell side liquidity engineered, there's a buy side liquidity engineered. Um, if you are a logical trader, or if you want to be a professional trader, these are the times where you have to decide to sit out instead of gambling your way out towards either side of liquidity. Hence I've written here no commitment on a daily time frame, engineered liquidity on both sides. This is the daily liquidity levels, these are the weekly liquidity levels. We are not god that we can predict that one side of the liquidity will be taken out first. So let's wait for, let's say if price takes out the sell side liquidity, we have a easy long trade to do. If price takes out the buy side liquidity first, then we can definitely play the retracement leg towards the weekly internal range liquidity, which is the IRL. Hence, I'm not going to the H4 timeframes or lower timeframes because NAS is yet to commit to it. So this is my outlook for the next week. I hope this was helpful to you guys. Let me know in case you have any questions or comments in the comment section. Until then, have a wonderful week ahead. Thank you so much. Bye.